Have you ever wondered if Benjamin Graham's principles still work in the 2025 market? With the rise of cryptocurrencies, fintechs, and growth stocks, many believe that the ideas of the intelligent investor are outdated. But is that really true? What if I told you that the same fundamentals used by Warren Buffett can still help you invest safely and intelligently, even in today's modern landscape? In this video, you will discover how to adapt Graham's teachings to the current market, avoiding speculative traps and finding real opportunities for appreciation. If you want to learn how to invest based on solid analysis, and not on risky bets, watch until the end, because I will show you exactly how to apply these concepts in today's world. I will create the full script following the defined structure, maintaining a casual and analytical tone, with strategically placed CTAs to keep engagement high. And before we begin, make sure to like this video and subscribe to the channel so you don't miss more investment content that truly makes a difference in your financial future. Benjamin Graham is known as the father of value investing, that is, investment based on value. He taught that investing is not speculating but buying solid assets at prices below their actual worth. His book The Intelligent Investor shaped names like Warren Buffett, who considers Graham his greatest mentor. But does this philosophy still apply in a world where companies grow exponentially, digital assets are gaining space, and the speed of information makes the market react unpredictably? Yes, and I will show you how. But first, comment below. Do you think fundamental analysis still works today? I want to hear your opinion. To understand how to apply Graham's teachings in the current market, we first need to understand his three fundamental pillars. The first is simple but ignored by many: focus on value, not price. Today, we see technology stocks skyrocketing, cryptocurrencies soaring insanely, and companies being valued in the trillions. But are these valuations justified? Graham teaches us that market prices fluctuate, but the real value of a company comes from its fundamentals. This means looking at financial statements, profits, debts, and growth consistency before investing. For example, Amazon, Tesla, and Nvidia are giants, but is their current price aligned with their true value? If you want to learn how to analyze companies like a true intelligent investor, subscribe to the channel because we have more videos explaining this in detail. Graham's second pillar is the margin of safety, and this is a concept that can save your money in 2025. The margin of safety means buying an asset when it is significantly below its fair value, thus reducing the risk of losses. And this has never been more important. In the past year, we have seen tech companies that were at their peak plummet more than 50%, simply because they were overvalued. To avoid this, you need to understand how to calculate the margin of safety of an investment before buying. If you want a full video on how to calculate this margin for stocks and even cryptocurrencies, comment below, "I want to learn about the margin of safety." Now, the third pillar is essential to surviving in a market as volatile as today. The market is a servant, not a master. Graham created the concept of Mr. Market, a fictional character representing investor irrationality. He shows us that the market can be euphoric or pessimistic, but that should not dictate your decisions. Just look at the last few years. We've seen stocks explode and then crash without a rational reason. Cryptocurrencies hit record highs and plummet days later. Those who followed the herd and bought at the peak lost money. The intelligent investor does not get carried away by emotion. They analyze the fundamentals and take advantage of opportunities that market irrationality offers. In fact, if this advice makes sense to you, leave a comment saying, "Graham was right." But how do we adapt these principles to the 2025 market? First, we need to talk about technology. Many say that Graham's philosophy doesn't work for growth companies, but that's not true. The secret is to look at the fundamentals, even in innovative companies. For example, how do you evaluate an artificial intelligence company or a biotechnology startup using the intelligent investor principles? The key is analyzing cash flow, revenue generation, and long-term growth sustainability. If a company doesn't generate profit and depends solely on investors to survive, that's a red flag. And what would Graham say about cryptocurrencies? He would probably see many of them as speculation, but that doesn't mean we can't apply the value investing philosophy to this market. The secret is differentiating solid projects from speculative bubbles. Would you invest in a company without knowing who is behind it, without understanding its revenue, or without knowing its purpose? Then why would you do that with cryptocurrencies? The intelligent investor looks for projects with real utility, growing adoption, and a strong financial base. Bitcoin, for example, has characteristics that make it comparable to a store of value asset. But many altcoins are nothing more than empty promises. So, do you think Graham would invest in Bitcoin? Comment your opinion below. Another essential point for those who want to invest safely in 2025 is considering ETFs and passive funds. Graham always advocated that most investors should focus on diversified, low-cost investments because trying to beat the market can be a dangerous game. Today, we have ETFs that allow for safe and diversified investments without needing to pick individual stocks. If you want a video just on the best ETFs for 2025, subscribe to the channel and turn on notifications. Benjamin Graham emphasized that the market is driven by emotions, but few investors truly understand the impact of this. And greed are the forces that drive irrational fluctuations. In 2025, with social media and instant news, impulsive decisions are even more common. The intelligent investor must shield themselves from these influences, focusing on fundamentals. How do you control your mindset to avoid poor decisions? The answer lies in discipline and understanding how the market works. Fundamental analysis versus technical analysis. Which to choose? Many investors wonder if technical analysis is compatible with Graham's teachings. While fundamental analysis evaluates the true value of an asset, technical analysis studies chart patterns and market behavior. But does one approach exclude the other? In 2025, a hybrid strategy can be effective, where asset selection is based on solid fundamentals, but entry and exit points are optimized with technical tools. How to identify undervalued companies in 2025? Identifying undervalued companies has evolved with new metrics and tools. Beyond traditional P/E and P/B ratios, modern metrics like EV/EBITDA and discounted cash flow are now used. How can we find companies trading below their real value, even in innovative sectors? The secret lies in deep financial analysis, growth prospects, and sustainable competitive advantages. The role of artificial intelligence in investments. With advancements in AI, we have a new factor in the world of investing. Machine learning models now analyze millions of data points to predict trends. Can a fundamental investor benefit from this? Yes. The intelligent investor can use these tools to refine analyses, identify hidden patterns, and increase efficiency. However, AI does not replace human judgment and critical thinking. The intelligent investor and sustainability. ESG, environmental, social, and governance, is a concept increasingly present in investments. Sustainable companies have attracted institutional investors, and regulators are demanding transparency. How would Graham evaluate companies in this context? He would likely seek those with competitive advantages, stable growth, and efficient management. The intelligent investor must analyze whether ESG adds real value or is just a marketing strategy. Protecting capital in times of crisis. The market is cyclical, and crises always arise. How can an intelligent investor protect themselves? Strategic diversification, a margin of safety, and patience are crucial. History proves that those who do not panic and continue investing rationally benefit the most in the long run. The impact of interest rates on investments. Interest rates directly impact financial markets. How does this affect Graham's principles? In periods of high interest rates, conservative investments may be more attractive. In low interest rate environments, strict criteria are essential to avoid speculative bubbles. Understanding the relationship between monetary policy and company value is crucial for making smart decisions. The pitfalls of meme stocks and viral investments. In recent years, we have seen the rise of meme stocks and trend-based investments. How can an intelligent investor avoid falling into this trap? The answer is simple: by analyzing fundamentals and ignoring market hype. Many of these stocks have no solid foundation and often lead to significant losses for those who enter at the wrong time. The future of value investing. With the market changing rapidly, it is natural to wonder if value investing will still be relevant in the future. The answer is yes, as long as it is adapted to new realities. The secret is applying Graham's principles with flexibility, considering the impact of new technologies and modern investor behavior. How to build a Graham-inspired portfolio. Finally, how can you build an investment portfolio following the intelligent investor principles in 2025? Diversification between value stocks, safe assets, and growth opportunities is essential. Additionally, patience, and a long-term focus are fundamental. By applying the right concepts, it is possible to build a robust portfolio resistant to market fluctuations. The journey of Michael Carter: how an intelligent investor achieved financial freedom. Michael Carter was born in 1985 in Pittsburgh, Pennsylvania, into a middle-class family. From a young age, he saw his parents work hard to pay the bills and ensure a stable future. However, he realized that relying solely on traditional work was not enough to build wealth. At age 25, after graduating in engineering, Michael came across a book that would change his life, The Intelligent Investor by Benjamin Graham. First Steps and the Discovery of Value Investing. Inspired by Graham's principles, Michael decided he needed to invest strategically. At first, he made some common mistakes, buying popular and speculative stocks without solid fundamentals. Then, he delved deeply into the philosophy of value investing, understanding that the secret was acquiring assets below their true value and maintaining a margin of safety. In 2012, Michael made his first major decision based on Graham's teachings. He bought Apple shares when many believed the company had already peaked. Using fundamental analysis, he realized that the company still had strong cash flow, a robust ecosystem, and a loyal customer base. He purchased the stock at a price he considered undervalued and held on to his position. The importance of the margin of safety and diversification. Following Graham's second pillar, Michael never invested without calculating his margin of safety. He avoided the temptation to follow passing trends and diversified his portfolio with traditional companies and low-cost ETFs. While many lost money on speculative startups, Michael invested in companies like Berkshire Hathaway and Coca-Cola, ensuring a balanced portfolio. During the 2020 crisis, Michael took advantage of market irrationality. While fear dominated investors, he saw opportunities. He bought shares of solid companies that were being traded at significant discounts, such as Microsoft and Johnson & Johnson. 3 years later, these investments had more than doubled in value. The role of patience and consistency. Michael knew that the market should not dictate his emotions. He followed Graham's lesson that the market is a servant, not a master. He never sold out of panic and maintained his long-term strategy. This behavior was rewarded. By 2025, his investments had reached a level that allowed him to leave his job and live off the dividends and earnings from his stocks. Financial freedom and the legacy of Benjamin Graham. Today, Michael Carter lives in California, traveling the world and educating new investors about value investing. He teaches that there are no secrets or shortcuts. True financial success comes from discipline, patience, and rigorous analysis. Thanks to Benjamin Graham's principles, he achieved financial independence and built a solid future without relying on quick fixes or speculation. Michael's story is proof that the intelligent investor principles are still highly effective, even in a world of digital investments and fast-moving markets. The story of Emily Turner, the new generation of the intelligent investor. Emily Turner, a 26-year-old from Austin, Texas, has always had a sharp eye for finances. The daughter of hard-working parents who never had investment knowledge, she decided to take a different path. During her economic studies, she discovered The Intelligent Investor by Benjamin Graham and realized that she could build wealth through patience, discipline, and a rational approach. First Steps and the Philosophy of Value Investing. In 2023, right after graduating, Emily decided she wouldn't follow the crowd. While her friends were investing in speculative cryptocurrencies and uncertain startups, she followed Graham's fundamental lesson: focus on value, not price. Her first investment was an ETF of solid S&P 500 companies, ensuring diversification and security. Instead of chasing quick profits, Emily deeply studied financial statements, identifying businesses with strong fundamentals. In 2024, during a market downturn, she took advantage of the opportunity to buy shares of companies like Google and Procter & Gamble, based on her intrinsic value analysis. Margin of safety as protection against mistakes. Emily understood from an early stage the importance of the margin of safety. For every investment, she required a significant margin between the market price and the company's real value. This protected her from buying overvalued assets and prevented her from making mistakes driven by FOMO, fear of missing out. When a new wave of hype emerged in 2025 with AI and augmented reality companies, she remained calm. Instead of investing blindly, she analyzed the financials of these companies and identified that many lacked sustainable cash flow. She avoided traps and maintained her long-term focus. Emotional control and long-term vision. Emily knew that the market could be irrational. While many investors panicked over negative news, she saw opportunities. She learned that the market is a servant, not a master, and took advantage of irrational moments to expand her portfolio with discounts. With a solid portfolio generating growing dividends, Emily already has a clear plan to achieve financial independence by age 35. Her strategy: continue reinvesting dividends, maintain a diversified portfolio, and follow Benjamin Graham's principles. Emily Turner, the new generation of intelligent investors. Emily is proof that Benjamin Graham's teachings are still highly relevant in 2025. While many seek shortcuts, she understands that the true path to wealth lies in patience, fundamental analysis, and emotional control. Her journey is just beginning, but her clear and disciplined vision ensures she will get there. Now, to close with a golden key, let's talk about the fatal mistakes that Graham would never make in 2025. The first is buying stocks or cryptocurrencies just because they are rising. This is called FOMO, fear of missing out, and has already led many people to financial ruin. The second mistake is ignoring fundamentals and betting on assets just because of hype. History has already proven that this never ends well. The third mistake is failing to diversify. Investing everything in a single company or sector can destroy your portfolio when the tide turns. If you want to learn how to avoid these mistakes, keep following our content because we will teach you how to invest intelligently. And now, tell me, after all this, do you still think Graham's principles are outdated? If this video helped you see the market differently, leave a like and share it with a friend who needs to learn how to invest more safely. And if you want to learn more about finding undervalued stocks, watch this video here on the screen now. See you there.